Hello. Today is Thursday, April 9th. I am Cindy Allen, CEO of TradeForce Multiplier, a global trade consultancy services that's handling everything from high-level strategy to classification projects and risk analysis. Welcome to Simply Trade, Cindy's version, where I base an international trade update on a Taylor Swift song. This podcast is brought to you in association with the Global Training Center. And today's song is The Story of Us. And for those of you who are used to tuning into my podcast, you'll see I'm in a little different spot. This week, I'm playing Gigi to my grandkids in North Carolina for their spring break. So if you hear a random child voice, you'll know why. And it does mean that I have a different background today. Today's song, and we're also recording this a little bit a day early because I'm going to be traveling tomorrow to NCBFAA's annual conference, where I hope to bring you an on-site interview with a couple of folks and participate in the Simply Trade happenings at the NCBFAA. So what happened in trade this week? Well, it's been another busy week of trade. Lots of things happening. On Congress, the Hill, DHS is still largely unfunded, although TSA funding was passed. Some of the officers are still being funded under the big, beautiful bill, but a lot of the trade folks are still without pay. And we're going on over a month now. The last sale bill, which is still being considered in Congress. It's not final yet. There's lots of discussion in the trade, lots of different trade associations that are commenting on the bill. But there's equally as strong support for eliminating the last sale process for valuation. And I think the important thing to note is that this is a normal valuation process. It is part of transaction value. It's been supported by several different court actions, but that doesn't stop Congress from actually changing the law. Many companies view this as just another valuation method like computed value, transaction value, deductive value, and they used first sale in their processes. They are fighting back, saying this is a valuation that is used and should be continued in the future. At the White House threatened to assess 50% duties on countries that sell weapons to Iran. We don't really know how this would be implemented under what authority, since IEEPA has been deemed unlawful. There is no real quick way to assess duties on this. For China specifically, they could just revise the Section 301 tariffs. However, for other countries that would be subject to this, there is no easy, evident way to assess the tariffs on this. So we'll continue to watch that. No additional news on that from the White House or being reported. So this may not be something that occurs. It may just be a threat from the White House that continues on. And in other regulatory areas, the Labor Department announced that it implemented a tool to assess foreign practices using forced labor. We don't know what that means. There wasn't a lot of detail in the release, but we do know that CBP has a very robust tool. Perhaps they're just sourcing that tool, or if it's different, we don't know, but we'll continue to look. It may be that the Labor Department is going to get more involved in forced labor as CBP shifts focus to all the other trade enforcement areas. The Labor Department has always had a role in forced labor and looking at that because of their expertise in labor. So it'll be interesting to see where this shakes out and whether the Labor Department is going to take a more advanced role in forced labor enforcement and at least forced labor detection on a global basis. U.S. Trade Representative Jamison Greer published an op-ed in the Wall Street Journal. And for those of you who haven't read it, you might want to check it out. It's a little eye-opening, but nothing surprising, I think. He expressed his frustration with the World Trade Organization, which he had just attended, and outlining his thoughts that the World Trade Organization has really moved on in its effectiveness, and that his thoughts on whether the U.S. will continue to play a role in the World Trade Organization, which is really interesting because of the role that the U.S. has had in both leadership and also in ensuring that the World Trade Organization moves forward. So very, very plain that the U.S. trade rep is frustrated with the WTO and its inability to have an effective role in world trade areas. On to the 232. Steel and aluminum changes that were recently announced actually took effect on April 6th. So we're seeing continued and smooth processes. We're not hearing a lot of issues with transmitting the new 232 duty rates. The minimus, which was set at 15%, anything less than 15%, has an ability to not pay 232. That's been seen as a real positive overall. A lot of companies are taking advantage of that, and they are applauding the government for moving forward and making that change for 232. Also, there were changes to the HTS. The annexes reduced or eliminated some tariff numbers from being covered by 232, specifically some in the beverage area. So if you are one of those importers, you may want to look and make sure that are taking advantage of those eliminations. And the component level classifications that are seen as somewhat positive or neutral in many areas. Neutral because even though it does outline whether you are subject to the 232 or not, so that ambiguity has gone away. There is a 25% tariff on the entire product, which is seen as an increase in some areas. We are still assessing, the trade is still assessing what that looks like in the future and whether that's positive or negative. The good thing is it reduces ambiguity. And right now, that's a welcome thought. As well, CBP released guidance on this on April 3rd. So you may want to take a look at that if you're subject to 232. USMCA is progressing with talks, but very strained. Some see this as central to the North American production support, which supports U.S. manufacturing, especially in the near term in the next several years. But Jamison Greer, the U.S. Trade Representative, has indicated he does not think that those will be concluded by the July 1st deadline, but they are still ongoing. Members of the trade have expressed some frustration that there doesn't seem to be a good understanding and agreement between the three countries of what is needed to move forward in negotiations. There's many different and varying positions by the three governments, and some are questioning whether this is going to be a successful negotiation. I think that those in trade and those looking at this, although they are saying it's strained, recognize that overall North American production and the USMCA supporting North American production is really critical to the success of U.S. manufacturing. So hopefully that will continue in a more positive vein moving forward. On the CBP side, the recent customs business ruling that was issued impacts some AI companies, has created some discussion and concern among those trade tech companies. They are openly questioning whether they need to become a licensed customs broker if they are performing certain activities. And I think the customs brokerage industry is a little concerned with that because they don't want to source technology from what was be seen as a competitor, as a competitive customs brokerage concern, even though those companies may not be transacting true customs business and transmitting entries on behalf of importers. I think it muddies the water because if you are a customs broker, you really act on behalf of the importer. And if you're a customs broker in the traditional sense and you're filing entries, you are acting on behalf of the importer. And if you have to get your technology from a company that's also acting on behalf of an importer, that creates an issue there. So I think that we'll continue to see some questions being posed to CBP on this ruling and clarifications of what this really means for the customs brokerage industry overall, what it means for the AI companies and tech companies that are involved in international trade, and also what it means for importers. Do they have to now become a customs broker to transmit entries on their own? Although the ruling doesn't seem to point to that, it's an open question that some have asked. It's something that I think CBP really needs to clarify, and I hope someone steps up and asks those questions of CBP. Customs has also issued a new portal account application process. It was announced by CBP and has already taken effect. And if you are a company that is seeking a refund, you have to get an ACE portal account. So this is going to impact you. So do look on CBP's website for that new portal process. It's supposed to streamline the application process and make it a little less onerous and a little more timely in the support because it doesn't necessarily involve a person at CBP having to process your application. There are some limitations to that. Do look into that or speak with your customs broker who has expertise on this. Overall, The war with Iran is paused for 2 weeks. Reports there's going to be a toll of up to $2 million for a vessel to maintain safe passage through the strait. This has raised a lot of alarms that this is an additional cost that oil companies and their vessels will have to undergo. This is still a work in progress. We don't know the details of this. What we do know is what has been published in the press as the agreement between the U.S. and Iran, and we'll continue to look at that. The funds will be shared reportedly by Oman and Iran, which do flank the Strait of Hormuz. In association with that, Bloomberg has published statistics that factories in Asia have seen price increases of 55% for some plastics. And this really does lead to all of the downstream processes and products that are affected by the oil passage through the Strait of Hormuz. It's not just oil, it's also fertilizer, which is a byproduct of pumping that oil and producing that oil, downstream plastics production that is based on oil. And the markets have been very volatile in response to this. We saw some positive gains. We saw some decreases in the last day or so. And I think they are reacting to the volatility and uncertainty. If this only takes effect for 2 weeks, how does that affect after that 2-week period is up? Also, what vessels in the Strait of Hormuz are going to be prioritized and be able to pay that $2 million to continue the passage through the strait? This has also increased gas prices, but it's increased diesel fuel to a lesser degree because that is a longer term manufacturing process. So we'll start seeing those diesel increases this week or next, according to some of the oil and gas experts. Now on to CAPE and why I chose the song, The Story of Us. And if you remember, CAPE is the Consolidated Administration of Processing Entries that CBP is developing. There has not been a new update since my last podcast, but I do want to talk about why I chose The Story of Us. The Story of Us by Taylor Swift is really focused on the painful silence and miscommunication between two people. And I think that's very appropriate in this regard, not just between CBP and the trade, but also CBP and the court. There seems to be a level of misunderstanding of what's going on here. And specifically the lyrics, a simple complication, miscommunications lead to fallout, so many things that I wish you knew, so many walls I can't break through. And really, I think the court, unfortunately, is looking to CBP in the process of making its policy. They're saying, CBP, what can you handle? How can you handle this? We're not going to settle on a final policy until we hear from you. And CBP is not in the business of making policy, regardless of what people think. They are not the policy makers. They are the implementers, specifically in this administration. So they're kind of fumbling around saying, this is what we can do. And as the court updates its direction to CBP, they also have to update the approach that they're taking, which is why we've seen some changes in the CAPE process. We'll include this. We aren't going to include that. The phase in of some entries, knowing that there's going to be successive phases because of the court direction. And unfortunately, I think that has led to a lot of miscommunication and a lot of issues with the trade understanding what's going on with the court, what's going on with CBP. CBP seems to have been pretty clear in their filings with the court of what they are building, how they are building it, and what the process is of that build. What we don't know is how that's going to be applied from a policy perspective. We still don't know about finally liquidated entries. We still don't know if those are going to be included, excluded, if you have to file a protest, if you don't, if you should be filing a court action. We don't know. And that seems to have been stopped or miscommunicated between CBP and the court as to what is needed. And the court seems to be waiting until CBP finishes with the CAPE process to make that decision. So it's going to be really interesting because we in the trade are kind of outside that wall of communication and we don't know what's going on. Lots of people are making guesses. We're parsing the words in the filings and both from the court and from CBP with the court to determine how to provide guidance to our importer clients who are unfortunately waiting for this process to be defined and the court to issue final orders on how they're going to get their money back and what processes are required to do that. The other thing I want to note, the lead case that the court has been using, Artemis, has withdrew their court filing. So what does that mean? That means that the court had to start from zero, which they have. They've identified another lead case and they named it, and they have reissued orders that mimic the ones that were filed in the Artemis case. But just another wrinkle in the process that the trade has to deal with. We haven't seen any major impact on that, on the court case moving forward, and we do expect another update being filed by CBP next week. So new test case, new processes, still unknown what you have to do as an importer. We're continuing to follow the court actions as well as the CBP filings, which have been a wealth of information. No communication, miscommunication there, a wealth of information, but unfortunately just not the details that everyone is looking for to determine how and when these refund requests are going to be filed and issued. We do know 45 days from the filing, you should get a liquidation. However, some in the trade have asked, is that 45 days from the normal date of liquidation? Is it 45 days of the filing? And when will the filing be processed? Will that follow the normal liquidation cycle? We aren't quite sure, but hopefully a future CBP ruling filing will clear that up. That's all for this podcast. That's the story of us right now. We'll talk to you next week.